And before we start, just a small risk disclaimer for everyone. The information provided in this webinar is for educational purpose only and should not be considered as financial advice. The content presented in this webinar is based on information believed to be reliable, but no guarantee is made as to its accuracy or completeness. Pupil and I shall not be held liable for any losses, damages, or expenses incurred as a result of the use of the information provided. Trading and investing in financial markets involve a high risk level of investment, and it is possible to lose all of your invested capital. Before making any investment decisions, it is important to carefully consider your financial institutions, investment objective, and risk tolerance. All trading and investment decisions are solely your responsibility. Participants should be aware of the risks involved and only trades or invest funds that they can afford to lose. And just a kind of reminder, CFD industry is one of the things that consider a high risk investment. So you need to be more careful on it. All right. So without wasting any time, we are going to start our webinar right now. Q&A sessions will come later on. So this is the topics that we are going to discuss tonight. Tonight we will talk about psychology issue while trading. Normally we'll teach you guys about the trading tools, technical analysis, fundamental analysis. This thing is very important during your whole trading journey. But what is the most important things that we need to understand is how can you control your emotions? No matter how strong is your knowledge, fundamental skill, technical wise, you know how to set TP, stop loss. But when the emotion came in, sometimes no matter how knowledgeable, how good you are, you might be not able to win your trade sustainable. For example, you use all of your strong knowledge to do one trade and gain from it. But when your emotion come in, you will like do some irrational trading. Like maybe you can open your positions larger and larger when you look at the profits coming in. So this is one of the things that quite important for the global traders to learn in order for them to enhance, to make their trading journey become better, because psychological control should be considered one of the main things that the traders need to learn. That's why we try to have this webinar tonight to let you understand sometimes it's not your fault. It's not that you cannot control your emotions. Sometimes there are scientific reasons to explain why are you doing so. And then in tonight's webinar, we will let you understand what is the psychological bias that the global investors are experiencing. And what is the most important thing is how can you adapt to it? And then how can you control it? All right. So this is the main things that we need to discuss tonight. So the highlight that we are going to discuss tonight is what is the crucial role of trading psychology. Later, we will try to let you guys understand what is the top 4 behavioral bias. Confirmation bias, representative bias, loss aversions, overconfidence bias. So what is the bias thing? Bias is like the emotions that when you do the trades. This is the strong emotion. For example, overconfidence bias. So when you win certain trades, right, until certain periods, you will have a very confidence to your trades, and then you will open your trades bigger and bigger, and end up just one mistake, you will likely to lose everything. So this is what we call the overconfidence bias. And we have a lot of bias that we are going to discuss later tonight. And then we also talk about the key takeaway that we need to know. All right, so what is trading psychology and why is it so important? So trading psychology refers to the study and mastering of the emotional and psychological factors that influence a trader or investor decisions making process in the financial market. So normally when you do your trades, emotions sometimes will come in first, because when we are doing the trades, all the profit and loss, the number are so huge. When we get a lot of profits, we tend to become very, very excited. And sometimes when we lose certain amount of money, we try to don't look at the losses and we don't want to close our order. We don't want to realize our losses. So we just ignore it and let it lose and lose and lose, and end up you might be lost everything. So psychological things that is the main thing that you need to control. Please remember that you should not have overconfidence. you need to make sure all the TP and stop loss is set nicely. So when certain times the assets hit your stop loss, it's better for you to control emotion and just close it. And sometimes when the emotions come in, highly advisable for you to stop for maybe 10 to 15 minutes, go listen songs, do anything that you like instead of just sitting in front of the charts and do all of your tradings. So sometimes emotions you need to control well, because if not, you will experience a significant losses in the trading journey. So please need to understand that emotion is one of the key things that you need to control. All right, so let's get started on the top 4 behavioral bias that global traders are experiencing. There are tons of behavioral bias, like psychological things that traders need to be understand, but I try to focus on the 4 I believe that is the most important for the traders that need to learn, and then how can we solve the issues. All right. So the first one is what we call the confirmation bias. So it seems like a very scientific terms, but the definition is actually simple. The definition is like the tendency to seek out and prioritize information that confirm pre-existing belief while disregarding or undervalue contradictory data. So it seems like a very confusing definitions, but put in a very simple term is normally when you look, like for example, you open certain trades, you open trades like gold market or normally like crude oil. When you open the trades, for example, you buy gold, and then when you open the trades, buy gold, and when you look through the news, sometimes several traders will only focus on the news that can support gold price to go up, and they might be ignoring the news that mentions the risk of buy gold is high and you need to aware of it. They might be ignored on it. Sometimes it will like that one. So you need to try to, this is what we call the confirmation bias. When you do certain positions, try to not let the positions to justify all of your decisions making. And when you long go, try to don't only focus on the news that can cause gold price to go up. You need to understand all kind of news around the world, and then you need to justify it independently. It's not like when you buy, you just focus on the buy news, and when you short, you only focus on the short and ignore all the positive news for the gold. So this is what we call the confirmation bias, and normally a lot of people, right, will like just focus on it one. They just focus on the things that align with their trading strategy. So this is a very, very bad thing, because market will always change every day. So when you only focus on the things that support your trade, sometimes the market change already and you are too slow to adapt to it, and then you might experience a significant losses. So previously, we do have a high impact news regarding on the war issue, Russian-Ukraine war, and we do have a lot of Middle East war that supports the gold price to go up aggressively. And then as for now, the news regarding on the war already slowed down already, is down already. That's why investors now more focus on the possibility of the rate hike from the Federal Reserve. But some of the traders, because the reason they only focus on buy gold, they buy gold. That's why when they look through all the news, sometimes they will ignore the fundamental that, like for example, fundamental to support gold go down, right, is regarding on possibility of the Federal Reserve to increase the interest rate. So when they buy gold, they will ignore this news, but only focus on the war. They will just search news regarding on the war issue and then try to make them understand that the war as well still very, very serious. Then this is the thing might be benefiting the gold. They will only focus on this news instead of trying to adapt the market and try to align what the global market perspective are thinking. All right, but as for now, the news already changed because we don't have much news from the war already. The latest news regarding the gold that is going to affect the gold market right now maybe should be regarding on the possibility of the rate cuts from the Federal Reserve. So this is the main things that you need to focus on it. So you need to change and adapt to the markets every day. Or even we can notice that recently a lot of Fed members are mentioned they are likely to maintain a high interest rates in the higher term. So this is a key thing that you need to aware of it. You need to understand all kind of news around the world, and then what is the good thing is it's better for you to follow our Telegram group, get the latest update, or you can try to find someone that contradict with your view. So if you buy gold, you don't have to only focus on the buy positions, the bullish news for the gold. You can understand other things as well. So you can seek advice from analysts. You can seek that multiple analyst advice to see what is their opinion on it. Try to understand everything rationally instead of just follow your trades. You can try to discuss with your friends, seek for guidance. You can also visit our webinar and then ask several different opinions from everyone in here, especially us. You can also ask us. So it's good, even you like confirmation bias is a key thing that you need to avoid too, because normally like it's not good for your trades. Because like if you just focus on the things that benefiting on your trades, sometimes if the news already changed, you might not able to change your trades accordingly. You just follow on your own rules. And sometimes market will change every day. So if you just focus on one thing, it shouldn't be enough. All right, so you need to be understand on it, the confirmations, bias. And then the next thing should be regarding on the representative bias. This is also the another key thing that you need to understand. Just now confirmation bias is we look at the news that support our trades, right? But representative bias is we try to use our past experience to do the trades. For example, previously, we do have the war. Normally, this is a thing that can cause gold price to go up. And then we do have a lot of news. Then in future case, right, if these things happens again, we might be expecting the things might be same again in future. So when you open the trades, right, it's not recommended for you to only according to your past experience. As I mentioned just now, this is very difficult for us to trade only according to past experience because what's happened in the past might not happen like this in the future. So of course, you need to extra aware of it. For example, nobody is going to experience things like COVID before. So if you just apply during the COVID-19 periods on your trading strategy, and you just apply the trading strategy that before COVID or maybe 5 years before, you apply this trading experience and trades during the COVID periods, you might encounter a lot of losses. Or for example, if you trade during COVID periods, if you apply the experience when you're trading during COVID period and you put it into now, you will also experience quite a different thing. I give you an example. During COVID periods, right? Normally, investor only focus on a few things regarding on the vaccine, regarding on when will the lockdown to be when will the lockdown to be closed? Like everyone is going to do things. So when will this thing happen? So when COVID periods, right, investor will normally focus on these few things: COVID, vaccines, how many cases we do have, and things like that. But before COVID, right, traders will only focus on economics data and try to predict what the Federal Reserve is going to say instead of just vaccine. Imagine during the COVID periods and you only trade according to the historical economics data instead of the latest news regarding on the vaccine and certain lockdown things. You might be experiencing certain losses also because during COVID periods, traders are not going to focus on data to trade compared to last time. Last time, for example, if one data is bad, maybe dollar will be dropped aggressively, gold might be going up. But during COVID periods, data is not important. Vaccine progress is the most important thing. So during that period, if you're applying your experience to trace on the data, you might be encounter a significant losses one. So we move from COVID until now. So COVID period is focused on vaccine, and now investor will shift their focus back to the economics data. So now if the economics data performance is very good, then maybe the dollar might be going up and gold might be going down, certain things like that. So you need to keep changing accordingly instead of just use one past experience and do the trades. So representative bias is things that trying to let traders to understand, try to don't use your past experience. Even sometimes your past experience is good. I'm not saying that you cannot just use any past experience to do the trades. I'm just saying that you cannot 100% rely on your past experience. You can maybe like 50 to 60%. Just don't open the trades too big within your comfortable zone should be enough. All right. So normally, how can we solve the representative bias is like we need to update ourselves every day. We need to understand more scenario every day. So we try to have like, for example, if gold price keep increasing in future, then you are expecting gold price might be increasing. If gold price increase history, but you are expecting the gold price might be keep increasing in future, this is something that wrong. For example, Bitcoin market, you are expecting previously Bitcoin is going up aggressively, but you cannot expect the trends will be keep going on. Of course you can, but just don't 100% sure about it. So sometimes even like cryptocurrency increase aggressively recently, but there will be also sometimes in future basis, certain things happens, things become different. So stay aware about potential statistical error. Don't try to predict that this product keep increasing, then I'm expecting it will increase for the next 2, 3, 4 years. No, it's better for you to not 100% rely on it, and then consistently questions whether past experience are truly representative of the current investment situations. So for example, if I'm just applying my COVID-19 trading strategy to now, it's not relevant anymore. But in future basis, maybe if COVID happens again, that is another story. But if you want to apply your historical experience during the COVID and apply to now, it's not relevant. Now, what is important should be mostly on the economics data, the Federal Reserve statement, the ongoing war issue right now. So you need to keep changing your mind. Don't use just one historical experience to do all of your trades. And of course, encourage a broader and more objective assessment of available information. So you need to keep getting a lot of new knowledge every day, and the latest hype should be regarding of the artificial intelligence. Try to understand it more and try to put it into your investment strategy. There is no such things that top 3, 4, 5 strategies to guarantee your success. Trading is one thing that you need to keep updating yourself because you are compete with people. So what people thinking even like 1 week ago are different from what people thinking in future, like for now. For example, you yourself as a trader, what you expect on yesterday might not same with what you expect in future. So imagine in the trading world, we are trying to compete with the global trader. It's just not a simple charts like that. All of the price movement will be affected by the global traders' decisions. So you can imagine if everyone are changing their mind every day, why don't you? If you just stay to like top 3, top 4 strategy for you to trade your trading journey, you might be suffer, in my opinion. So it's better for you to keep updating yourself and try to compete with the global investor. And then global investor will normally always update themselves. So it's insufficient for you to use your own past experience and do all the trades in future, because nobody is going to think the same thing every day. So this is a key thing you need to aware of it. Representative bias is also one thing that you need to be careful and stay tuned. And then loss aversions. Somebody discussed about the loss aversion just now. When they lost, they don't want to close their order. So this is a key thing. They don't want to set TP or stop loss. This is a key thing that I think most of the investor will be understand it, will experience before. So let us explain what is the loss aversions. Loss aversions bias is the tendency to strongly prefer avoiding losses over achieving gains in trading. I'm not sure that have you experienced this thing before. So when you open your trades, right, when you like look at the profit and then you gain some only a little bit of your profit, you feel very happy, then you just close the order because you're afraid that in future that your profit will become losses. But when you lost on certain trades, even though you already set your stop loss, you will keep moving your stop loss lower and lower and lower because you are not willing to accept the failure. You are not willing to recognize the losses, because when you close, you confirm loss already, right? But if you don't close, you are expecting in future it might become better and better. Is it true? So this is a key thing that you must be aware of it, which is loss aversion bias is the emotion thing that you must be controlling. So it's not good that when you lost, you don't want to realize your losses. This is a key thing that you need to aware of it. And then normally, how can we control and how can we overcome in this issue? So of course, you need to set a clear and well-defined stop loss level for each trade. So in future basis, when you lost your positions, you set your stop loss level, you better for you to don't move it lower and lower and lower in future. So one stop loss, just stop. If this thing come to your mind and control your emotion already, you are not willing to cut loss or things like that, you need to leave your desk. It's highly advisable. You cannot say that you look at your losses and then you feel pain and you don't want to recognize the losses and you continue to do the trade. It's highly not recommended because this is not you anymore. It's the emotions that control your mind. So stop loss is very important that you must be understand on it. Develop and follow a good trading plan that includes predetermined exit point because all of your trades have the risk. So when the trades are not aligned with your perceptions, your expectations, sometimes highly advisable for you to change it and maintain a discipline and objectivity in trading decisions, focusing on risk management. And when the losses, like your trading things controlling your mind, highly advisable that you leave your desk. Maybe 5 to 10 minutes is already good enough. So anything that make you feel that when you lost, you don't want to close your losses, you expect if you're going to go back, rebound back in future, you have this kind of feeling, right? It's better for you to just close your trades and just follow the stop loss order. And if you still cannot control it, it's better for you to close your computer and leave the desk, rest for a few minutes. Because this is a key thing that you need to know. Even you are the expert in trading, you understand all of the trading tools, but you're not able to control emotion, it's not good. All right, so I hope that loss aversion is really the main things like that you must be careful on it. It's not your fault. It's like human nature. Everyone is experiencing things like that. Why we do have the loss aversion terms over here? Because we do have a lot of scientific proof. They prove a lot of things regarding on the loss aversions. People are not willing to recognize their losses, and people are not willing to accept they fail on certain things. They only enjoy success. So when they feel they don't accept it, they leave it or they even ignore it. So this is the main thing. I believe that cause a lot of people lose your trades. So how can you solve it is set a clear stop loss, leave that if you keep moving your stop loss level lower and lower, you don't want to accept the fact that you're already wrong. No, in trading there is no always right, no always wrong one. You need to, of course, accept that you are wrong on certain thing, but maybe you will be right in future. All right. So one to two times, even three times, multiple times of making wrong decisions is okay in trading strategy. Sometimes you just need one decisions. So sometimes it's okay for you to accept that you are already making some wrong decisions and certain things. Okay. So loss aversions, hope you understand on it. Next thing is also very important, which is what we call the overconfidence bias. So overconfident bias, I think, happens to everyone. So when you open your trades, right, especially when you profit on certain trades, some people cannot control their emotions. For example, I use $50 and I gain $100, and then from 100 I gain until $1,000 assumptions. So I might have expectations that I am really a strong trader. So what if I use $1,000 and gain $10,000 to $100,000? So when you constantly win your trade, right, your positions that you are going to open is going to become better. It's going to become higher and higher and higher in future. So for example, overconfident have a big disadvantage. It's like if you are correct, right, and then even you correct 10 times you correct 8 times and you have the overconfidence already, and there will be chances that your 9 to 10 of your trades, right, will open with a very, very huge trading lot size. So you just need one mistake, you are going to lose everything. You are going to lose the previous correct trades. So overconfidence is the main thing that you need to control. So when you win your trades, right, you need to understand that this is not only you, and sometimes you might be lucky, and sometimes you might be because of certain things that make you win the trade. It's not only about you. It's not only about that. You are too strong, and then you are not going to make mistake anymore in future. In trading world, there is no always 100% correct trades one. So it's okay. It's better for you to don't have too overconfidence that I correct in my previous trades. 5 trades already TP. I can believe in others 2 to 3 trades, I am going to TP also. Then I open my lot size become bigger and bigger. This is the biggest loophole for the global trader, I believe, because no matter how many trades you are correct, sometimes it just require one mistake, you will going to lose everything. And this will lead to what we expect about the overconfidence bias. So this is the main thing that you must be careful on it. Try to don't overconfidence on your certain trades. Even you correct with 10 trades, 11 to 12 trades, you still need to maintain your average loss size. Better to don't overtaking the risk. This is the normal situations for the global trader. When I correct, I open bigger and bigger and bigger and bigger, and end up you lose everything. So this is also the main thing. No matter how strong you are, please control your this overconfidence bias. All right. So how can we overcoming the overconfidence? You need to regularly review your trading records objectively. You need to understand that all of your trade strategy, is it because of luck or is it because of certain things? Is this certain thing is going to happen again in future or not? We don't know yet. So it's better for you to keep review it instead of just look at the profit and say that I'm a good trader. No, you need to understand why, what caused you to win the money. And then is it going to happen again in future? Try to understand it objectively instead of unbiasedly, instead of like you think you are strong and then you are not going to make mistake in future anymore. And can 100% guarantee you everyone is going to make trading mistake. It's just like how can you control all of the mistake, accept those mistakes, and then learn things in future. Try to don't get overconfidence on it. Seek external feedback and different perspective is important. So when you win your trades, maybe you can ask, and this is your trades is legit. Is it because of luck or certain thing? Try to accept further people questions, the further people informations also. So try to accept all of the information around the world, but then digest it. Stay humble and open-minded in your trading decisions. So when you look on certain trader, they lose money, they win money, you can be with an open-minded things to understand their situations. So even one trader keep losing money doesn't mean that he's a bad trader. It's just because of that period maybe not suitable on him. Or for example, if you are keep winning money in this month, doesn't mean you can apply your same trading strategy in next month. It's just because of like in this month, maybe your thinking are same with the global traders. But can you guarantee that your mindset, your thinking will be same with the global trader around the world in the next month? No. So I think no lah, but some of you, if overconfidence that you think can, then it's a good thing, and yet it's also a bad thing. So try to don't overconfidence like that. What you trade, what you correct in this month doesn't mean you will apply the same trading strategy in next month. So don't overtrade yourself and constantly upgrade your news, your knowledge. All right. So overconfidence is the one thing. If one trader tell you that I win trade in the past 3 to 6 months and I'm very strong already, and try to not believe that much, because this is something that you cannot guarantee. As I mentioned just now, global trader, you are trying to compete with the global traders. Everyone have their own perspective. You are correct. Your trades are correct. It just means that you are like thinking the same way from 60% in the market. They think the same thing with you, but you cannot guarantee this is a thing that's going to remain the same every month, every year. So please accept the fact that sometimes we might be not perfect, especially don't try to have too confidence in yourself. And most important thing is try to don't open your trades bigger and bigger. When you win certain trades, then you have very confidence and you open the trade bigger and bigger. This is really the biggest loophole for the global traders that need to be understand on it. Controlling your trading size is very important. And yeah, this is how can we solve the overconfidence things. All right. So when are we not fit to trade? As I mentioned just now, when you want to leave your desk and rest a while. First thing, biggest loophole, hungry for money. Of course, everyone trades because they want to reach, right? But when you have the feeling that you want to get rich quick, right? You're not able to control your emotions already. You will be overconfident, you will be open trades bigger and bigger. You will be confirmations bias, open the trades, and then you just focus on the news that's supporting your trades. These are things that is considered not good. If you keep thinking to earn money when you do the trades, normally you have all kind of bias come out, psychological bias come out. And the worst is you can't control emotion anymore, because you are not going to accept the fact that certain trading decisions are wrong. You are not. You are just thinking that, oh, I need to get rich in 5 minutes, 10 minutes, or even 1 hour. Even you are wrong, you are not going to accept the fact that I'm wrong. Maybe I'm not the one who can get rich quick. You are not going to think like that, right? When you are hungry for the money. You will just keep trying and end up you might be not able to control emotions. You might be suffer a significant losses. So this is a key thing that you need to be aware of it. If you're hungry for money, highly not advisable for you to do the trades. You can hungry for money, but during trading periods, maintain your emotions, maintain your calmness. I believe is the key thing, no matter how strong you are. And when you're angry, when you lose your certain trade, you need to understand that just one trading mistake doesn't mean everything. So it's normal that you make some trading mistake, but the key thing is you need to accept the fact you already mistake in this. Maybe we need to move on, learn from the mistake. And maybe this month, I'm not the same way thinking from the global trader. It's not your fault. Sometimes it's still good for you to have your own way of thinking. It's just like unluckily, your thinking, your perceptions are different with the global traders. Maybe just this month. So just accept the fact that you're wrong. Maybe next month will become better. Just don't like over trading it. Like I'm wrong now, then next time I might be not wrong. I open the size bigger and bigger. This is the things that highly not recommended for everyone. So when you're angry, please leave the desk. When you're tired, also please leave the desk. So it's highly not recommended for you to trade before you sleep. It's better for you to close all of your positions before you sleep so you can sleep well. This is highly recommended things because if you can't sleep, I don't know whether you guys have experienced before when you open trades overnight, right? You will open the trades, you go to the bed, and then maybe 3 to 4 a.m. you wake up, you look at your trades, you look at the trade, you say that, wow, profit a lot, lose a lot. Then sometimes you will make some irrational trading because you just wake up, you see all of your profit, then you might tend to open your size, your trades bigger and bigger. Then you go and sleep again. Next day, you look at your trades, you lose everything. Then you will get mad every day. Or vice versa, you lost, look at your trades, then you see you lose your money already. Then you don't want to close your order, you don't want to set stop loss or what. You see loss, oh, never mind lah, just sleep, then tomorrow will be better. The next day you look at your trade again, you lose everything again. But of course, there is some good scenario lah that you do something right, your trade are earning money. But what's the point that if this affect your sleep, and what's the point that you want to suffer from it? Because trading, why you want to trade, why you want to invest, because you want freedom, right? So when the charts, when the price movement are already controlling your emotion, controlling your freedom already, what's the point for you to continue to do it? Because you trade for freedom, it's not like the trades control your freedom. You know what I mean, right? You want to freedom, that's why you trade. But if you put all of your emotion inside your trading, it's become different already. Trading will actually eat up all of your freedom. All right, so please aware that, and how you overcome your how to become a good trader in future. It's good for you to set up your own principle, do risk management, protect your capital wisely. And then of course, learn every day, join our webinar, join our Pure Prime Telegram group, visit our website if you have some free time. All right. This is a key takeaway. So continuous earning, emotion control is very important. Adaptability matters. So trading world is confusing, diverse. Everyone is going to make their trading decisions and affect the price movement. So accept it, learn from it, and then trying to adapt it is most important. Golden rule, control emotions. All right, so this is all the webinars, important things tonight. We hope that you learn some